In the world of trading, everyone tells you to look for shapes. You've got your triangles, your flags, your head and shoulders patterns. But what if I told you the real story isn't in the shapes you're drawing, but in the price action itself? In this explainer, we're going to break down why understanding market structure is the absolute key to unlocking what the charts are truly trying to tell you.
I bet you have, right? It's plastered all over social media, all over trading forums. Just draw this triangle, wait for the breakout, and boom, you've got a winning trade. It's such a tempting promise, this idea that a simple geometric shape can somehow predict the future of the market. So why? Why are these patterns so darn popular? Well, it's because they seem to offer a shortcut, a way to cut through all the noise and chaos of the market with a simple, easy-to-follow map to profits.
And the psychology behind this is really powerful. These patterns look easy to spot. They give us this feeling of control in a market that, let's be honest, is inherently uncertain. They promise a simple if this happens, then that happens kind of formula that feels incredibly comforting. But the real question is, does it actually work? Well, as many traders find out the hard way, this is exactly where that simple promise often falls apart, and it leads to a whole lot of frustration and confusion. This quote just nails the core issue perfectly. A map isn't the territory. Think about it. A drawing of a triangle is just that. It's a drawing you put on top of the chart. It's a map. The real market, the territory itself, is this complex, dynamic thing driven by millions of decisions from buyers and sellers. A simple shape just can't capture all of that. And this right here illustrates the trap perfectly. We're promised this clean, predictable breakout. But what do we usually get? A confusing and often costly fakeout, where the price just dips its toe out of the pattern and then snaps right back in the other direction. We're promised simple rules, but in the heat of the moment, it all gets so subjective. Is that really a perfect head and shoulders? Is my trend line drawn right? All that certainty just vanishes. Okay, so if we're going to stop trying to force the market into these neat little geometric boxes, what are we left with? What should our focus actually be on? The answer is market structure. This is the real deal. This is the bedrock, the very foundation of price movement. And the best part? It's not an interpretation. It's what the market is actually doing. Now let's break this down, because it sounds technical, but it's actually super simple. All market movement is just a series of peaks and valleys, what we traders call swing highs and swing lows. Market structure is simply the story that this sequence of highs and lows tells us about who's in control, the buyers or the sellers. And here is the absolute crucial point. An uptrend is just a series of higher highs and higher lows. A downtrend is a series of lower highs and lower lows. That's it. It is that simple. It's not a pattern you have to force onto the chart. It's the language the chart is already speaking directly to you. So, how do we learn to read this story instead of just looking at pictures? Let's walk through a classic example. Okay, here's a classic. A lot of traders would look at this chart and immediately see that famous head and shoulders pattern, a supposed sign that the price is about to reverse and go down. Their focus is on the shape. They're looking at the book cover, not actually reading the pages. But hang on, let's just erase that drawing for a second. What did the price actually do? Well, it made a high, and then it pulled back. Then it failed to make a new high, and instead it created a lower high. That's a huge clue. It tells us the buyers are losing steam. And then it broke below the previous low, creating a lower low. That right there, that's the story. The trend is shifting, and the price itself is telling us step by step. And honestly, that's really all there is to it. You just need to train your eye to do two simple things. First, just identify the obvious turning points, the peaks and the valleys. And second, just ask yourself, are the peaks getting higher or lower? Are the valleys getting higher or lower? The answer to those two questions tells you everything you need to know. So let's bring it all home and make this distinction crystal clear. At the end of the day, it's all about choosing the objective reality of the market over these subjective drawings. This table just lays it all out. Pattern trading is based on subjective shapes and is all about trying to predict one specific outcome. Structure trading, on the other hand, is based on objective swing points. I mean, they either happened or they didn't, right? The focus isn't on predicting, it's on understanding the current trend, the flow of the market. One is ambiguous and confusing, the other is clear and logical. And if you remember just one thing from all of this, let it be this. Stop trying to guess the story from the book's cover. Open the book and actually read the pages. Read the story that the sequence of highs and lows is telling you, moment by moment. So the question for you is simple.
Are you going to keep looking for subjective shapes, hoping one of them works out? Or are you ready to finally start reading the actual story of the market? The choice and the clarity that comes with it is all yours. Thanks for tuning in.